Looking ahead to their key events and themes this week, let's start off in the UK with the pound. We do have the variety of PMIs out of the UK in the form of manufacturing, construction and services. Do mark those on your calendars, as we know they make up a large percentage of the UK's growth. They have been a bit of a hit and miss over the last few months really, but they are worthy of note as they do influence the pound. And more importantly for me, as we've seen with GBP, it has encountered quite a large amount of resistance around 135 to 136 zone, which was the Brexit gap. I think we're likely to drift lower now to walk back towards 130. Seems to run out of steam, and that could be the case unless the Bank of England follow through on their recent hawkish rhetoric, which suggests of a hike in the coming months. Also to weigh on the pound is the lack of progress on Brexit. We did have Theresa May speaking in Florence just over a week ago now, and her speech did really let down the markets actually. It's just fluffy words such as Britain will be the EU's best friend after Brexit. So really disappointing there, and I think this could weigh on the pound. As I say, unless the Bank of England make a move anytime soon, we could see that drifting back lower, giving up those gains that it's had made over the last couple of weeks or so. Looking over in Australia then, we do have the RBA rate decision. No change expected in policy. I'm not expecting anything for the next 2 years actually. Looking for them to remain extremely accommodative on policy and for them to reiterate that. There's a few key problems, underlying issues with the Australian economy at the moment. Weak wages, rising record household debt for Australians, and also rising energy prices. So if the RBA go and raise rates, this could cause a catastrophe for Australians. Elsewhere, we do have retail sales, and given the state of consumer finances in the country, I wouldn't be surprised if we see a soft number here. Looking at Aussie dollar, it did encounter quite a bit of resistance around the 80 mark to 80.50, and looking for bids again, or some good buying interest around the 77.00 area, so do keep an eye on that. So for the time being, drifting lower for the Australian dollar across the board. Lastly then, looking over in the United States, we do have non-farm payroll, so big NFP week. Last month was actually quite disappointing, poor amount of jobs added, and we saw a rise again in the unemployment rate back to 4.4% then, which did consequently weigh on the dollar. I think with the dollar going forward, much of the market is pricing in this rate hike for December. We have seen the Fed indicating their likeliness of raising rates next year in terms of their pattern for that. However, I still think the dollar is capped in terms of its upside. Yes, if we look at the dollar index, we have seen a bit of a pullback. It has once again encountered some resistance in a well-respected supply zone, and I think it could continue its move lower, to be honest with you. For me, at the moment, it isn't attractive to be holding dollar if you're looking at some of the other majors across the board. Other than that, that's it from me, guys. I hope you have a smashing trading week. Thank you.